Thank you very much, Alam. Bismillahir Rahmanir Rahim. Alhamdulillahi Rabbil Alameen. Wa salatu wa salam ala Sayyidina wa Nabiyyina Muhammad wa ala alihi wa sahbihi ajma'een. Distinguished guests, ladies and gentlemen, Assalamu alaikum and good morning. It is my pleasure to be here with you today to launch and to share some of the insights from the thought leadership report that has been developed, titled Islamic Banking for Financial Institutions, Unlocking Growth Amidst Global Shifts. The report has been developed by Standard Chartered SADC in collaboration with the London Stock Exchange Group, and I have the great pleasure of sharing some of the unique insights that we have looked at when we go through this report. The report is titled Unlocking Growth Amidst Global Shifts, and we all live in a world of changing market and economic dynamics. Eric has very well articulated for us, some of the challenges and some of the opportunities that we face, and we want to put that in the context of how financial institutions that are operating in the Islamic finance space can leverage and take advantage of some of these developments. Before I go into the insights, I want to just talk about the partnership. And the report is a collaboration between Standard Chartered SADC and the London Stock Exchange Group, and it aims to provide insights on the Islamic finance industry to a number of different stakeholders that will approach the industry from different perspectives. This is the first report which is focusing on financial institutions. We will be launching other reports in the series as well, looking at other stakeholders like corporates and different segments, and we will be highlighting some of the developments that are there. The report looks at the development and overview of the Islamic finance industry. We look at some of the growth drivers that are shaping and developing the industry over the last decade. We look at some of the inhibitors that continue to persist and remain a challenge for institutions that operate in this space. We're going to be looking at opportunities in the outlook. The report also highlights a number of unique products and showcases them. It provides case studies in different markets that are developing in a unique manner. And something that is very, very significant is the client insights that the report brings out. So we have conducted an executive survey. We had 26 responses from different institutions that operate in this space. We had insights from market leaders in many markets, including Saudi Arabia, the UAE, Bahrain, Oman, Pakistan, the UK, sharing their feedback on the development of the industry, the challenges they see, the opportunities that they see, the significance and importance they're placing on the industry, and I'll be very happy to share some of those insights with you. My presentation today is just going to touch the surface, but you all have a copy of the report in the bags that were available in your seat. I highly recommend that you go through the report and get further details on many of the insights and the research that was conducted for this initiative. So to start with, I want to talk about the development of the industry. And 2025 is a very unique milestone for the Islamic finance industry. It was 50 years ago that the first Islamic financial institution, Islamic Development Bank, Dubai Islamic Bank, were established back in 1975. So the industry has had 50 years of development and growth. And it's very, very fitting to see that in 50 years, we have actually crossed $5 trillion in assets. That's a very meaningful, that's a very, very meaningful figure for the markets. We've grown from a niche segment that operates in certain markets to becoming a truly global segment. Today, the Islamic finance industry consists of nearly 2,000 financial institutions that operate it, and in over 80 countries around the world. And there are 53 countries today that have Islamic finance regulations. What that means is 53 regulators and policymakers that have strategically recognized the significance of Islamic finance, placed importance on it, and developed standards and regulations to help guide the development of that industry in their markets. The industry has been growing over the last decade at an average of 12% year on year. Double-digit growth, and in most of the strategic markets growing at twice the rate of their conventional counterparts, and it's projected to hit $7.5 trillion by 2028. The industry continues to be dominated by two key segments, which is Islamic banking and sukuk, that collectively make up over 90% of total Islamic banking assets. And the other segments, the kaful, other financial institutions, are still developing. If we do a further deep dive on these two segments, Islamic banking and sukuk, we find some very interesting insights. There are about 600 Islamic banks or Islamic banking windows that operate in over 73 countries around the world. Islamic banking assets are at about $4 trillion today, and it projected to hit $5.2 trillion by 2028. And the industry has been growing at a rate of about 11% year on year. Very, very significant geographic diversification when you think about the fact that Islamic banking is offered as a service in over 76 countries around the world, more than the number of OIC countries even that are there. And then when we look at the sukuk space, that's also very interesting. Sukuk has grown to almost $1 trillion today, projected to grow to $1.5 trillion by 2028. There are 35 markets that have issued sukuks, whether dollar denominated or local currency, whether sovereign or corporate. And there's about 5,700 sukuk instruments that are outstanding today. The sukuk industry has been growing faster than the overall industry at about 14% year on year. And sukuk is also one of those spaces where the industry has been very successful in attracting conventional capital. So that is non-Sharia sensitive capital. It has been able to draw in through the use of this instrument that has been gaining greater acceptance in the financial services space. A couple of very quick client insights that I also want to share that I felt were very interesting. Of the respondents that we surveyed, 87% of them said that they had a very positive outlook for the growth of the industry over the next 5 years. You have to keep in mind the survey was conducted earlier in the year, and there was a lot of uncertainty around broader economic growth, a lot of uncertainty around what the US would do, what the Fed would do, what would happen in international markets. So despite that backdrop, it's very interesting to see that 87% felt that there was a very positive outlook for the industry going forward. The other thing that's very interesting is of the Islamic finance windows that we surveyed, 80% of them said that their institution, their conventional banking institution that they operate under, 80% of them said that Islamic finance has been identified as a key priority area for those conventional institutions. So that is also very telling to see the growth of this segment. So we've seen the growth develop, but what has been driving it? I think when we look at that, there's two main drivers. One is regulatory development, acceptance, and mobilization from policymakers and regulators in the established markets, and the other is the expansion into the new markets. So let me start with the regulatory developments. And we all understand that Islamic finance is well established in certain markets like the GCC, Southeast Asia, South Asia, North Africa, Turkey, etc. But what we're seeing is different markets develop and roll out Islamic finance in a different manner. Within Saudi Arabia and Malaysia, Islamic finance is considered to be strategically integrated in all aspects of their economy. It makes up a very significant size of the banking system. In Saudi Arabia, we project it could be up to 70%, if not more. It makes up a very significant part of government policy in terms of how they raise funds, how they support local markets, tax incentives that are available in Malaysia for those that operate in the Islamic finance space. You have a number of corporates in these markets that adopt an Islamic finance first or an Islamic finance only approach. So it becomes very, very interesting to see how that has rolled out. The other thing that we've seen is that a number of markets have developed formal Islamic finance strategies that have been adopted to support the growth and development of those markets. You have the likes of Indonesia, Kazakhstan, Oman, Turkey. Just yesterday we heard the UAE cabinet approved the Islamic finance strategy that was proposed. Very, very major milestone for the industry. They have set very, very strong targets. The total size of the industry is expected to grow from just under 1 trillion dirhams, where it stands today, within the UAE, to about 2.5 trillion within 6 years. So more than double the growth of the industry in 6 years. There's a number of initiatives that are underpinned within the strategy, but again, the UAE government also recognizing the significance of Islamic finance and adopting a formal strategy that will be chaired by a committee that is going to be headed by the governor of the central bank, to help develop and make sure that the UAE takes advantage of the opportunity that the Islamic finance industry presents. We have seen a number of regulatory developments. Pakistan is a very, very interesting case, and we've in fact done an entire spotlight on the development of the Islamic finance industry in Pakistan. If you are not aware, the Federal Sharia Court decided that the entire banking system and financial system should be in compliance with Sharia principles. And they've set a target of the end of 2027, a very, very challenging target. The banking sector is being driven by the State Bank of Pakistan, the capital markets and other sectors being driven by the SEC of Pakistan. The government has prioritized the issuance of sukuks, and what we've seen out of that is a 23% growth in Islamic finance assets, 17% growth in Islamic Sharia compliant deposits. So a very, very significant development, and we expect that to continue up until 2027. And then the other thing that we're seeing a lot of interest in is conversions of conventional institutions into Sharia compliant or Islamic institutions. We have seen the likes of conversions in Bahrain, in Kuwait, in Qatar. There's more rumored conversions that are projected to take place in these markets as well. So we are seeing conventional assets convert and enter the Islamic finance space as well, and that all fuels the growth of the Islamic finance industry. The other thing that we've seen is the expansion of the Islamic finance industry into new markets. So you have your established hubs, but every day, every year, we see new markets entering the space. In particular, there's a lot of development in sub-Saharan Africa. We have already seen the development of Islamic finance in markets like Kenya, Nigeria, South Africa, and so on, but we're seeing new entrants look at this space and enter the space, including Ethiopia, Malawi, Uganda, and various others. We've seen a lot of interest in Central Asia, and we know that a number of markets in Central Asia, including Kazakhstan, Uzbekistan, and others, are looking at the development of Islamic finance as a key driver of their economic growth policy and to support increasing trade with other parts of the world. The Eurasia Development Bank, Islamic Development Bank, and others are very active to support stakeholders in these markets to grow and develop and offer Sharia compliant solutions to their customers. And then finally, we see frontier markets, the likes of Philippines and Thailand in Southeast Asia, the likes of Suriname in South America, the likes of Algeria and others in North America that are increasingly looking at the development of Islamic finance. And one of the unique insights that we saw is that consistently stakeholders told us that local demand is considered to be one of the primary drivers for the development of Islamic finance. Another 20% said that regulatory development is a key supporter of that growth as well. So with that driving the growth, what is holding the industry back? I think that's also important for us to look at and reflect on and understand what are some of the inhibitors that are perhaps not letting Islamic finance reach its potential and holding some of the development of the industry back. Well, one of the biggest ones is the regulatory complexity. Now, 10 years ago, when we talked about regulatory complexity, everybody understood that this meant difference in standards in different markets, right? How do you operate across different markets? Everybody's developing in silos, and that is a big challenge. But I think we've made a lot of progress in breaking down those silos. I think there is greater understanding and acceptability of what products can work in different markets. Institutions know what products to target customers in different jurisdictions, and because of that you have a lot more cross-border activity than you did, say, 10 years ago. But I think the new challenge today is around some of the new international standards that are coming out that are fundamentally changing the way that the industry operates, right? A number of IOFI standards that have been coming out. You know, there's draft rules for how Islamic windows should operate. There are guidelines on, Sharia compliant benchmarks in the wake of the transition away from LIBOR and the transition towards risk-free rates. You have this complexity on how Sharia compliant benchmark rates should operate and who should be setting those and what role international standard setting bodies have to play in that. I think one of the most pressing matters over the last couple of years was the development and rollout of Sharia Standard 59 from IOFI. And Sharia Standard 59 was a major shift in how the markets used to operate in terms of sale of debt and how they operate going forward. The impact, while it was felt, I think has become manageable now, as a number of law firms and structuring institutions have understood how to in a practical manner, comply with the requirements and standards without impeding the growth of the industry, right? And now today we talk about Standard 62 and what that will mean. And Standard 62 proposes an actual transfer of ownership of the underlying sukuk asset. And that will fundamentally change the way sukuk operates as an instrument from being a debt-like instrument to an equity-like instrument with different risks, different return propositions, so on. Now, I have to say that this standard is still, being developed. There are draft versions of it in the market. There is a transition period that is incorporated into the standard. I think IOFA is starting to understand some of the concerns that the industry has faced, but again, we'll have to wait and see what impact that has on the market. But what is very, very telling is we asked about Standard 62 in our survey as well, and only 34% of respondents, about 1/3 said that this standard will have a positive impact on the industry. So that is quite concerning when only 1/3 of the market feels that the standard is going to support or enable that, and that is something that I think we all should be mindful of. We cannot neglect that. The other major challenge that we identify is liquidity shortfalls. Now, again, the Islamic finance industry, the liquidity landscape has developed a lot in the last 10 years. A number of new products have been rolled out, a number of new solutions have been developed, but these challenges still persist. Some of the structural challenges that we have, lack of secondary market trading, lack of high quality liquid assets, complexity, and so on, continue to be there. And while we have seen a number of developments in markets like the UK, the UAE, Qatar, we still see the industry hindering. The repo space is a major development. You have international bodies that have developed products. You have the double WAD structure being utilized in the GCC. You have sale and leaseback being utilized in Malaysia. So there is development on that front. But again, something very, very telling when we asked our stakeholders, is the Islamic liquidity management solutions sufficient? Only 36% said yes. A little over 1/3. And you have to remember, these are institutions that are operating in some of the most developed markets for Islamic finance as well. If just slightly over 1/3 of them feel that the liquidity management solutions cater to their needs sufficiently, what about FIs that are operating in new or emerging Islamic finance markets? There's still a lot of work and development that needs to be done on this front as well. And then the next growth inhibitor I want to talk about is risk management. And Eric very well articulated many of the challenges that we face, the uncertain economic landscape. We don't know what's going to happen with commodity prices, with exchange rates, with currencies, and so on. How do we mitigate that as financial institutions in a Sharia compliant manner? Now again, what I have to say is that we are not where we were a decade ago. There has been a number of new products that have been developed. There's been a number of new solutions that are there. You have WAD-based hedging agreements, you have profit rate swaps, you have forward agreements, and so on. You have international standard setters like IIFM creating the Howard agreement. You have the double WAD that is being increasingly used. But challenges still persist. And I think here there are two main challenges. One is cross-border usage. So different products are acceptable in different markets, so it makes cross-border activity very, very difficult. And I think the second challenge is a lack of awareness and understanding. Many institutions still feel that their products are not available. They don't have an understanding of how these products work. Many Sharia scholars don't understand how these products can be implemented. So I think there is a general need to increase awareness and increase the capacity of the market to be able to tackle that. So with that having said, what are some of the opportunities that we see? Well, the first one is, not surprisingly, in the capital markets, right? We are seeing, as I mentioned, with so many countries launching Islamic finance regulations, 53 countries, with 33 countries having sukuk, there is a structure. Regulators and policymakers are looking at these at Islamic capital markets, providing more oversight, and that is driving more customer confidence. You see a number of different international institutions that are also entering the space, which highlights the increasing confidence that the industry has. And what we see, particularly in the sukuk space, is a number of new instruments that are coming through. There's a lot of focus on short-term sukuk to create liquidity. There's a lot of focus on retail sukuk. There's a lot of drive through Islamic pension funds. So a number of pension funds in Muslim markets are increasingly allocating their portfolios to Sharia compliant managers. And that creates a great boom for the asset management space in Islamic finance as well. The other market that we see as a great opportunity is sustainability and ESG. There is a very, very significant convergence between the principles of Islamic finance, maqasid al-Sharia, and ESG considerations. There is a strong highlight to preserve the environment, to provide social support, not to be harmful, not to support industries that are harmful. A lot of convergence that is growing in this space. We've seen a number of specific initiatives as well. Malaysia, a few years ago, launched the Value-Based Intermediation Initiative that was targeted at Islamic banks to create value through these activities and to disclose it. We saw the UAE last year, 2 years ago, launch the Guiding Principles for Sustainability in Islamic Finance. That also showcases the importance of sustainability within the broader framework of these Islamic financial institutions. And we have seen the impact of that in the sukuk and asset management space. Today, in 2024, ESG sukuk issuances was about $15 billion. It's more than doubled what it was 5 years ago, growing at a rate of over 50% year on year. Islamic funds had reached $10 billion in 2024, so we've seen a lot of growth in that space as well. Fintech and digital innovation is another key driver. We are seeing a number of Islamic financial institutions leverage fintech to do a number of things. One is to be able to access customers that they were not able to access before. Second is to be able to offer greater transparency and ethical solutions to their customers. And third is to create greater alignment with Sharia. Many of these Sharia considerations that were considered unpractical previously because of operational challenges have now become streamlined through the use of technology and data. And what we're also seeing, which is very interesting, is the emergence of digital-only banks in the Islamic finance space. So whether that is in Malaysia, Saudi Arabia, Turkey, UAE, you're seeing a number of digital banks that are built on the principles of Sharia compliant financing, set up and develop in their markets as well. And then the last opportunity, which again links to a lot of the things I've said, is around product innovation. We see a lot of opportunities in product innovation to help stakeholders tackle some of the challenges that they face and to address some of the opportunities that we have in the market. So we have Islamic liquidity management solutions that are being developed today. We have a whole stream of products and services that are being rolled out to help address those needs. You have trade finance solutions increasingly to be able to support working capital financing, to be able to support things like asset acquisition and so on. You have structured products and customized financing to be able to take advantage of unique capital market opportunities and to support private financing needs. And lastly, a number of Islamic risk management solutions to help our institutional stakeholders be able to tackle and manage those risks as well. And what I want to highlight, lastly, very quickly, is product spotlights. So in the report, to support the theoretical and the research considerations, we also want to highlight individual products, transactions that have taken place that showcase the breadth of the different solutions that can be offered. We've highlighted a number of different solutions. One was a comprehensive liquidity management solution for an institutional ASEAN government-owned fund that had cross-border movement of funds, external managers. They needed Sharia-compliant returns on their excess liquidity, various different aspects and considerations, and the product that was developed to support them. We saw the launch of the first additional tier 1 perpetual sukuk in the Islamic finance space, Al Raji Bank, and that was a unique issuance, a $1 billion issuance, part of a $5 billion program that was launched. We saw the rollout of expandable sukuk, repos. So with typical repos, rather than having a fixed end date and then a restructuring requirement, the ability to be able to expand the repo to provide greater flexibility on the liquidity management front. And we saw a number of trade finance deals as well. We've highlighted a unique one where a Singapore-based entity was supporting Saudi National Bank in being able to fund trade finance for their customers. So a number of different developments and a number of products to help address and showcase those developments. Ladies and gentlemen, that was just a very brief overview of some of the insights from the report. You have a copy of the report in the bag. You also have a QR code that is available on your table and also the QR code on screen. I highly recommend that you go through the report and go into some of the details of the research that we have conducted. And as I had mentioned, this is the first in a series of reports, and we hope that will be beneficial to yourselves. With that, my time is up. Thank you very much. Assalamu alaikum.